Happening. Good morning. Get through our morning prep here. I wanted to just wait until the jobless number hit. I didn't expect anything crazy from it, but nonetheless, I thought it'd be valuable. I'm going to start with the daily here on the ES. So, it's very clear what's happened, right? The same thing that's happened over and over again. You push into the 50 and it just goes, full bounce from there. And this isn't the first time we've seen this kind of an aggressive move before. It's happened prior, back in May. So we've seen this type of move before. And we get right back above the 21-day. Now, selling below the 21-day it's just such a no-no. You just don't do it. For the amount of times that it's actually going to work, you're just going to create so much pain for yourself. Continually, positioning yourself for a larger move when you're below that moving average. Now, as we continue up here, this is such a strong bounce. You have to think the all-time high is within target at this point. Now, do I think they need to take a breather? I do. I think, any move back towards 43.40 at this point is a viable move. I keep looking for, some sort of pullback to enter into a longer time frame long. Without, just going all in off the 50 touch, and it just hasn't come. And that's kind of what makes this market so difficult right now in the summer trading, is there's just not a move down after the initial pull, right? So sells off, everybody buys a dip, and then there's just doesn't seem to be that secondary retest of what could be the low for potential re-entry into the market or initial entry into the market with better risk reward setup. So with the ES, we're above, kind of resistance levels I have, and we're looking at our all-time high at this point. Like I said, it's very much right in the grasp. You haven't really seen much give back as far as sellers actually stepping into this market. Volume's been very, very poor the last 2 days, which is indicative of continuation higher. Remember, high volume generally in this market, especially, usually favors the sell side of the market rather than the buy side, because we're so retail based right now, based off of one, it's summer trade. Two, it's very, very Momo driven. That volume generally drops off the map when you start to get these trend days. So I don't measure any of these upside moves by volume right now. I just don't think there's any reason to. I more am using volume at this point to judge, the potential for a downside move, the potential for liquidation, because larger money that wants to liquidate can't hide themselves, when the volume comes in. So one thing about yesterday that kind of just has me, I don't want to say shaking my head, but it's reaffirming the idea that, there's really not a ton of great opportunity in this market right now, which is fine. It's July, it's coming into the middle of summer or close to the end, or, we're moving towards the end of summer. And when I start to see a profile like we did yesterday, where each and every downside move yesterday never had any follow through, had no continuation. And now I know what you're saying is, oh, well, yesterday was a trend. I guess, yeah, sure. I don't think yesterday was so much of a trend, more than it was just a nasty grind to the upside without sell pressure. But each and every time they did try to move lower, there's no rotation in the market. So they're buying literally every single time the market dips to a new low on a 30-minute time frame. That to me is showing, the same thing as this structure that we left from the previous day. It's just continuing to show, a lot of weakness in the overall market, the overall structure of the market. But that is not news to us. We've seen that, for months now. That hasn't changed. The market has been, structurally weak for quite some time at this point. But when I start to see this type of activity, where C period breaks, it stops on one time frame, and then D, starts back up, and then G period breaks, but H starts it back up, and J period breaks, and K starts it back up. And then you get that wild move in M period yesterday. This to me is a sign of, it's almost grasping at straws on the buy side. They're almost grasping at straws right now. They're just buying literally every single dip that comes into the market. And for me, that's creating, the potential for a strong secondary move to the downside. Now, I'm not, saying we're going to get it. I'm not saying we're going to flush or anything like that. I'm just saying, based off of how the structure is playing right now and based off of how the participants are really showing their hands, I think the potential is there that if this market does start to go, there's a good chance that it's going to go, you know, again, similar to what we saw. Now, keep in mind, this major move, quote unquote, that we saw down into our 50 was made in the Globex session. Yes, you had, you know, that previous Friday where it was a pretty good sell day, one of the only natural trend days we've seen in quite some time. You know, it wasn't really made in the RTH. RTH tried to sell it off, but really didn't. We had some gross, ugly balance profile on the low of the 50, which left, you know, an exceptionally questionable low at that. And since then, you know, it's just buy everything. They're just buying. So, you know, for me, if we're going to get any kind of significant downside move in the ES, one, we need to see it in volume. Two, we need to see it in the actual pit hours. We need to see it in the actual, New York hours, where the move actually takes place while there's a lot of money involved, not where the market is quite thin like it is in Globex. So if that is to take place, you know, some of the information I'm taking from this is simply this: is yesterday's profile. It would be scary to me if I was positioned too long right now. I would feel a little uncomfortable based on they're simply buying everything. Every single dip in the market they are buying. Now I get it. We're running into, you know, some pretty big earnings reports, but nonetheless, to not even get a continuation follow through on any of these dips is very, very concerning, I think, if you're long side. And for me, all that does tells me to step back. You know, I don't need to trade the ES today, and I have zero plans to. I don't think there's any good opportunity in the ES where we are right now. I do believe if you start to get through these lows, the C, E, G, M lows, there could be potential for stops. And we already know that 29.32 area, which is what we would look for support to come in. If that goes, then you have a great opportunity for this to really get down to that 4,300 number again. Now, if I am to enter this market, it's how we respond below 29 that I'm interested in. That's pretty much it. It's how we respond below 29. I have no interest in doing anything with the ES up here. I think it's very untradeable at this current state. So that's where I am on the ES. Let's move over to R2I. So R2I is R2I is like what's the word? It's like a needle in your eyeball right now. But it's it's doing what you would have expected it to do, right? We talked about the balance range multiple times. We talked about each time they look below this balance range, they're getting trapped and they're getting squeezed up, just like when they look above it, they're getting trapped and they're getting pushed lower. That's what a balance range is. There's you know, value in the middle, and outside of the balance, there's no value for the buy side to the up on the upper side of balance. There's no value to the sell side on the downside of the balance. So that's what balance is. That's how balance is created, right? It's looking to extremes and failing. So we look to this extreme, you know, again, towards our 200-day moving average in R2Y. Obviously, the buyers all came in. Now that we've pushed up and actually touched this 21-day, and I talked about this yesterday, this is where I'm looking to see, are they going to have a natural pullback? Are they going to naturally pull this market back somewhere towards, you know, 2180, 2160, reinvite stronger money, stronger buyers after getting rid of some of the weakness that's in this market up here based off of how the profiles are looking, and then recover the market up towards 2320. Now that is the trade I want to get on. So I'm still sitting here waiting. You know, I'm positioned for this move to take place to 2160, as foolish as it may sound, but I'm so far out that I think it'll be all right if it does take place. But nonetheless, this is the move I'm looking for, you know, to really get long if they're going to hold that for this retest of 2320 and potentially a move back towards this all-time high. Now, sorry, my mouse is working slow. Let me turn up the speed. So now, what did we get in R2I yesterday, right? Very poor structure. Again, you know, you don't get much more unfinished to the upside than this, okay? But what you have to take into account is there is a significant amount of balance that took place here, both in the RTH session and in the Globex session. And this part of the RTH session actually could complete the auction that was incomplete to the upside. Remember, I am not somebody who doesn't respect, you know, the Globex session. I believe the Globex session needs to be taken into account, especially given the fact that we're in a very Momo-based markets overall. Globex being a very Momo-based market as is, you know, I look at this like that could potentially be the closure of, the completion of what is a very incomplete profile. Now, as I'm watching this, and we got the jobs number starting to move a little bit lower here, I'm looking at the same thing in RTY that I'm looking at in ES. The potential is there for a significant stop run. Now, the difference, I think, for RTY is the 02 to 2210 level has worked as a great swing level. It's worked as a great area of pause. It's worked as a great, potential for the market to reverse. So again, what would I be looking for in that range is potentially seeing the buyer step in and stop any sort of sell-off. So that is my most important level coming into today, 2210, 2202. If that gives, you start pairing up some of these lows down here and you start seeing where the stops are going to be. There's really nothing down here that I see, and I'm going to draw it right now. We can draw it together if you'd like. The next area that I would look for as far as of interest would be where that M period is, right? And the reason I want to draw that is simply because look at how the market has responded around here, okay? M period was the late spike. Remember, spike rules. If you don't know what spike rules is, very simply, a spike is a late move away from the profile that doesn't have time to be confirmed. And then what you get is you get immediate rejection in the sell, then you get the recovery rejection, then you get a second recovery rejection. And then once it gets through, that's where you find your support and the market rallies from. So if this level is to give, this 02 to 2210 level is to give, that area, that 2160, like I was just saying, that is where I want to see a stronger buyer enter the market. That to me is a natural pullback into the market, which allows new buyers to re-enter, get some of these crappy, weak-handed buyers out that are buying into an absolute wall up here, flush them out of the way, tell them, move on, you got your money, congratulations, get out of here. Bring it down to 2160, see if we can, introduce some stronger money. And from there, if the opportunity is there, this is a buy that you can buy and hold if it holds, because I'm telling you, your target is up in the 2300s. So that is a significant trade. I'm looking to buy into that if and only if I see the buyers, come in and really challenge to hold this as support. And if they do hold that, 2160, I have it a little bit larger, obviously 56 to 63 range. If they do hold that, I want to make sure I am positioned properly for the next leg up in the market. Let me just fix that up. Fix all this stuff so I don't get into the open and not have it done properly. So let's take a look at NQ. Looking at the daily in NQ, I mean, there's not much to talk about. This was all planned. We all saw this was going to happen. We talked about this, in our prep, over the last few days. Now NQ is looking back above this upper trend line. Again, what happens when they get above this upper trend line, I do know, so please don't point it out. I'm aware there are times where they break above it and break away from it. But what they never do is accelerate away from it. They never say goodbye to it. They never break above and trend away from it and get, significantly off that upper channel. So as NQ gets up above this upper channel, I am hands off on the buy side. I'm hands off on the sell side. What I'm doing is I'm waiting for an opportunity to fade the market. I know it sounds stupid to fade the market in anything right now, but history tells me when I keep looking at this market, it keeps doing very similar activities. It keeps trying to break away from this upper trend line. It keeps failing to do so with aggression, and there's going to be an opportune moment for me to fade the market at least back to this trend line. Likewise, if they get back below this trend line, where am I aiming for? Well, I'm just aiming for that purple trend line again. So for me right now, I'm very, very much hands off NQ as well. I just don't see the opportunity there to really make a great risk to reward trade. I think for right now, it's kind of just it's trading. What I do know is, this 56 to 74 level has played really well as far as a good swing level. I mean, we've seen this, and this level goes back in time, right? We talked about this the other day. It goes back all the way to the July 2nd, where it was an inside bar break, where the market came in, retest, and then tried to make, a move higher. Similar idea as far as what I would be looking for on any sort of move back towards that level. Sorry, I got a little bit crazy there with my scrolling. But as it stands right now, we came through, we talked about this poor high 2 days ago in NQ. Poor highs on my tick setting on profile charts, poor highs are not very normal. They're actually very uncommon. So when you see that, positioning for that to be taken out is usually a pretty good play. But for me personally, I just don't see it right now in NQ. I'm actually fairly confident I will not make a trade today. I'm exceptionally confident of it, actually, unless we get a significant pullback in R2Y, which I think is the only market for me right now that is setting up as a potential buy down the road here. Let's just take a quick peek at the Dow just for fun. I do like the Dow. I think the Dow is a great trading vehicle. I just started actually trading it recently, and I really, really enjoy it. So for the Dow, I'm simply looking at the 824 to 848 area as being resistance. If they can get back up there, I would expect the potential for sellers to step in. Likewise, I think the 512 to 548 area as support. So the Dow yesterday doesn't have the same kind of profile that we saw on R2I, that we saw on ES, as far as giving the potential for a strong short covering, or sorry, a strong stop run to the downside. But it will, in fact, want to make a run towards its support at 12 to 48. And if it does, we can monitor it from there. And likewise, if it breaks through there, the 68 to 404 level. So I don't see trades in the Dow either. I mean, I kind of had this idea yesterday when I was doing some prep as well and doing a little bit of extra homework in the Globex session, just going over some things. I really just didn't see a ton of opportunity coming into today, which is perfectly fine. Don't have to trade every day. But it'll be a great day to sit here and observe the market and get some more information out of it, so that when the trades do come in, we can, effectively take them. And hopefully, the plan works and we all get paid. So that being said, keep in mind, yesterday I announced a new profile series starting August 11th. If it's something that interests you, please feel free to reach out to me if you have any questions, or check on the website, www.tradeuptradingroom.com, for more information. Have yourself a wonderful day. Trade well, trade safe. Make sure you trade your plan. Don't have to trade my plan, but make sure you trade your plan, stay within your plan, execute within your plan, live with your results. All right, we'll see you guys.